Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Friday morning market webcast. Okay, so anybody that was concerned that the volatility wasn't going to come back in the market, per usual, you had really not much to be concerned about. Markets get volatile, the volatility goes away for a little bit, and then it comes back. It's the way of the world. We are currently testing 3132, which is the 9-day here on the daily chart. Blue line right here. We talked about this area yesterday. Needs to convert this. If it can convert this, it opens up a move back to the pre-FOMC price, which is $29.50. What we saw yesterday was a move down to 2,900 support from the 9-day. So when I last left you, we were long into 31.32. We flipped there and got short that 9-day coming in. And then we got short on a second chance move from the proprietary lower level at 15.5. So those are a couple of big trades for us. Then when they couldn't take out the roundie, it's just kind of, oh, here we go again, right? So we ended up getting long down there, not at the lows. We got long at 29.05 for a nice trade. Followed it up long 29.15 overnight, which was a nice trade. So we're sitting at about 120 on the week, and we've hit our goal for the month of May, which we try to do. Our only stated goal in the room is 4 handles a day. So very roughly that works out to 20 a week and 80 a month, and we're sitting at about 87 on the month. But it's just a function of the volatility. So I go back to what I said. Markets get volatile, the volatility goes away, the volatility comes back. The key is patience, understanding the type of tape that you're in, and then adjusting your mindset and adjusting your trading for the type of tape that you're in. If it's a low volatility environment, you need to take profits where you find them, and all that stuff adds up and you'll be fine. In tapes like this, we tend to let our stuff run a little bit more because it wants to run. So as we head into today, the key for me, 31 to 32, the 9-day. Does it want to convert it and go to 50? Is it going to hold it again? If it does, then we probably go back and we test daily midband at 16, monthly pivot 29.19. The Bears have missed a lot of opportunities very early in the month of May. They've had an opportunity to convert the round number, monthly pivot, daily midband on multiple occasions since Wednesday. And throw the weekly pivot in there too. They have failed to do so at every turn. And that's why instead of trading 28.90 right now, we're trading 29.30 and change. If that continues, what we've seen historically is that the Bears tend to lose control of the tape, and it tends to bleed to the upside accordingly. So the Bears really need to dig in today. They need to defend this 31.32. It's going to be very important. And if they can, try to wind it back and put in a respectable close. If they can do that, then the daily chart starts to look like something with 9-day resistance. Right now we're long though. We're long against 27, and we're looking to see if they want to break it out. And the reason we're in this trade is because traditionally what we've seen in this situation is we've seen them convert the very last level. That's kind of like the last bastion of potential resistance and run to the upside. If they want to do that, then we want to be involved. Okay, everybody have a fantastic day. Come check us out in the room. We'd love to meet you. We got a lot of new people in. If you come in, you're going to learn with a lot of other people, right, fresh, and all start together, and a very nice tape to trade. So take care, trade them well. Have a good weekend. I'll talk to you soon. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.